Hey everyone, it's Thursday afternoon around 2:30 Central Time. We were on vacation for a while, letting the market play itself out, so we haven't done any updates, so sorry about that. We'll start with this chart here today. We posted this on the blog yesterday, and this is how we labeled it. And what we were showing, we went ahead and showed this as 4, 1, and 2, even though we don't like that count, and we haven't liked this count. But we were showing from here how things would have to play out and get up 3 of 3 would have to get up to 3,500 in the S&P just to be where wave 3 was as long as wave 1, and things just didn't look like that could happen. Put call, VIX, momentum, relative strength, sentiment, RSI, nothing. It's had its little moments, but nothing was sustained. We show the momentum, this green line down here on the momentum, and notice that in a third of a third, momentum should be at its peak, and it's not as high as it was at the third of the third of wave 1. Potential wave 1 and 2, and then the third wave up. And then we wrote on the chart, subwaves within the potential wave 3 to new highs are smaller than wave 1, doesn't look right. And then we pointed out how the momentum was diverging, and it shouldn't have been. And the most important thing, right here, Wednesday a week ago, we hit 78.6% retracement of the entire February-March decline. And that's usually where we throw in the towel on a 2-wave correction, but this time was totally different. Nothing looked right, so we just kind of stayed with it. And this is one sloppy pattern right here, even though the retail world has poured into the market, but even that hasn't managed to produce a pretty wave count. That we'll show on another chart in a second how it does count. But you can see this upper channel line. This is the wedge line. Market tagged it right here, tagged it right there, and this is what we put on the chart yesterday. This entire move is 61.8 times 1, potential 1. Really, it's 61.8 times A, we think. Which is perfect for a C wave. And so anyway, the market played around after it made that high yesterday and the day before, and then today, as everybody knows, the market's fallen away. So let's look at another chart here. We've never changed the labels. This is an ongoing chart that we've been showing. We kept it at the ABC. And this is the best way to count a 5-wave. You know, the C wave should be a 5-wave impulse or a diagonal, and this is really a sloppy pattern. There again, we show it C equals 61.8 of A. That's a perfect calculation. We showed that calculation way back when this move first started. Had our doubts that it was ever going to get there. But it finally did make it. And that's one of the common patterns. Next would be equal to C equals A, and then it could be the C wave could be extended. In this case, it's just barely had enough power to get up to the 61.8 target, and then the market looks like it's done a 1 wave down, an ABC 2 up, and 3 down, and we broke the channel line. That's a pretty important piece of technical damage right there. So this is how we're counting. We're looking for this to all play out as eventually as a 1 wave down, back down to the lows here. Once this is broken, it should be clear sailing all the way back to the low. Let's look at the next chart. Short So this is how the little bitty subwaves play out. We count it as subminuet wave 1 and 2, 3, and ABC 4, and then 5 waves, microdegree waves up of subminuet 5 of minuet 1 and 2. And this really, at the time it happened, this looked like a 5-wave pattern, but if you look real close, it makes 5 waves down to here. Then a little rally, so that would be an A and a B and a C. C would be very truncated. And then we did 1 up. 1 could have ended right here. You can actually count 5 waves with an expanding flat, a third wave, a 4, and a 5. This could be all of 2 right here. But we just labeled it 1, 2. 5 waves of 3, the microdegree, ABC decline for wave 4, big gap up for 3 of 5, 5 of 3, and then a little 4 and a little 5, very truncated, 5th wave to make 5 of C. So you can see how these waves, how the market was really struggling to get to this 61.8% level right here. And tag the internal trend line, and then once again, even in this move right here, you can see big gap down today. Looks like 1, 2, 3, 4, and 5 waves of 5, and we've labeled this. It's following this trend line right here. We've labeled this as 3, and we're showing 4 and 5 of 1. That's how it'll play out. Eventually, if this is all of the ABC, and this is a breakaway expansion gap right here, we're going to do 5 waves down for 1, then 2 up, 3, 4, and 5 at the minute degree down. Should come down and break this low, because if this is 5 waves at the minute degree, or 5 waves at the minuet degree, that will be ultimately be minute wave 1. That minute wave 1 should break this low. Doesn't have to break it very much, but it needs to break that low, and that would confirm that it's wave 1. Minute degree of primary 3, then we'd do a 2-wave correction, back up, and probably make everybody think that the market's going to be going back to new highs again, just like this move right here did. And then the first third of a third down, and the market will totally collapse. So we've been talking with traders all day long, speculating on what all is going to happen that could possibly cause that to happen, and it's not good. And we wish that a third wave up is what we were counting. We wish we would have got confirmation of a third wave up. Be better for the people, better for the world. But we have to deal with what we're dealing with, what we have in front of us. And on the charts that we showed prior to this, showing how we calculated that 5th wave high as the long-term charts showed. And now then, we should be doing a very big 5 waves down. So any surprise here, we'll come back and update. But and as this plays out, as this fulfills, if it fulfills like this, naturally, if the market goes back up and fills this gap, then it could be doing something else. I guess an alternate would be that this 5-wave rally right here could just be 1 minute wave 1 of primary 3 to the upside. Now that, and after this big correction, this would be a 2-wave correction, and then the market would blast off. I find it really hard to believe that the market could go to those kind of highs, overvaluations, at a time when there's so much going on in the world. But that's why we do the Elliott wave, because that's the only way to know what's going to happen. So anyway, we will be back just as soon as this, as soon as we get some more. And these charts will be on the blog. We'll post them on the blog this afternoon, so you can go back and look at them and study them if you want to closer up. If you hadn't subscribed to the blog, go ahead and do that. The links are on the some of the videos. And we will be back. Take care.